Live. Okay, hi everybody. My name is John Whelan. I'm the Managing Director of Digital Assets at Banco Santander's Corporate Investment Bank in Madrid. Been a practitioner in digital assets for a while, but I'm not here to talk about Santander and the work that we do today. I'm here in a moderating capacity and delighted to be joined by my good friend and colleague, Max Heinzle from 21X. Max, just to get it started, maybe a quick introduction of yourself and a little bit about 21X, and then we can dive into a conversation.
Yeah, thank you, John. My background is in capital markets. I started in investment banking, venture capital, mezzanine finance, corporate finance. I innovated crowd investing in Central Europe 10 years ago. We basically transitioned from subordinated loans to first security structures for the purpose of also funding larger projects, pre-IPO fundings of startups that were, or couldn't actually say startups, fast-growing companies, but also real estate projects. And then in 2015, I came across blockchain technology and decided that I would try and innovate and try and drive the revolution of capital markets by making use of blockchain technology.
So that was your personal evolution, and then 21X started when? When did you launch?
So 21X started pretty much on the day 3 years ago. Was back then that the EU Commission announced that the EU DLT regime would become effective as of March 2023. And I was following the iterations of the drafts that were published on an EU level very closely over the previous months. And for us, it was clear that if it would materialize in the form that it was put out there, that it would actually set the foundation for the revolution of capital markets. And so when it actually materialized, it was on that very day that we, alongside with our shareholders, made the decision that we would put all our eggs in a basket and try and become the first DLT market operator in Europe, which we are now as of the 3rd of December in 2024.
And for those of you in the audience, given that this is the United States, who are not familiar with the DLT pilot regime in the European Union, that was a structure that was put in place by the European Union a few years ago in order to allow the issuance of digital securities, MiFID II instruments, and other financial instruments, the issuance on distributed ledger technology platforms, whether they're public infrastructure, private infrastructure, but with the regulatory coverage and licensing equivalent that you might get for CSDs, central securities depositories, and MTFs, multilateral trading facilities.
I think that must be the best summary I've ever heard, John. Like, honestly, well said. Yeah, exactly that. So I always like to say, maybe in different words, like we've seen many examples of, say, players trying to push, like pioneers that have tried to put out, securities exchanges by trying to force technology in old legislation or capital market infrastructure regulation. And we are true believers that you need blockchain leveraging market infrastructure regulation in order to deliver on the promises and claims that have been made over the last decade.
So you're regulated market infrastructure in Europe for issuance and trading of tokenized digital securities.
Exactly. So it's covering product segments such as equities, debt instruments, fund structures, structured products. We are still waiting for the regulator to lift the restrictions in regards to alternative investment funds, but we see great developments there. We're not allowed to list yet complex financial instruments, so derivative components are not allowed yet. Also that we see changing in the very near future. But that's a great start. I think that there's a lot of demand for tokenized products in the product categories that I just mentioned, and that's it for the time being. Yeah.
So just yesterday, I think we all saw the announcement that available for trading, maybe not for trading, but for primary subscription before trading on the secondary venue, is a new product which is a digital tokenized money market fund where the underlying is actually a UBS fund. Tell us the journey that got you to thinking about launch of a money market instrument, number one, and then what it takes to coordinate the different parties in order to make it real in production in the market.
Yeah, so I'm maybe to give a quick summary on what the steps are. I mean, starting from the point there that we normally would have to and in this case it's a digital twin, so we have already an existing product. Yeah, we have a securitization platform that we work with out of Luxembourg that basically creates the digital twin, so the token that then in the next step is admitted to our primary market, as you rightly so said. We announced the launch of our primary market yesterday. In the next few weeks, we're going live with our secondary market. And so that's a very, common way of seeing issuers, now engage with market infrastructures like ours. So they take existing product, they create a digital twin of them, and it's a fast track. And then the next step, and next generation that we see a lot of traction in is obviously the natively tokenized form of those financial instruments. So no longer do they have to exist in a materialized form, as we say, but we, with the exemptions from the regulation in Europe, are allowed to actually record securities now directly on the blockchain, and has obviously impact on cost efficiencies and other advantages that we can realize, like, for example, automation.
So in launching this product for, let's say, primary subscription only to start, I'm guessing that you have some kind of KYC, know your customer wall for accredited investors and professional investors. How open is it for subscription?
Yeah, so generally speaking, we as a market infrastructure would be allowed to onboard any type of participant. I think that's one of the key differentiators as opposed to how capital markets work today. And we all know that if we want to access like the New York Stock Exchange trading system, we as individuals that we're sitting here, we can't do that, right? That's different now. So on 21X, you could actually directly connect as an individual, even though we're not focused on retail or individuals onboarding with us directly. We have a B2B to X model, right? That is now a reality. And I think that when you look at permissionless blockchain, many people think, okay, I can just connect my wallet like on a DEX, and I don't need to do KYC and AML. No, obviously you have to, right? We're being supervised and monitored very closely by the highest regulatory body in the EU. So out of BaFin and also ESMA, which is the equivalent, by the way, of the SEC. ESMA is short for European Securities Market Authority, right? And BaFin is the Financial Market Authority of Germany. We are obviously obliged to fulfill the same KYC and AML standards like others do too.
So this tokenized money market fund is not available for a free trading and transfer across the blockchain that you're using, which is Polygon Proof of Stake, which is an Ethereum virtual machine-based infrastructure?
Yeah, the token, so there's a whitelist smart contract, right, that ensures that tokens are only transferable to the likes of whitelisted wallets. And that's also why I like to always emphasize that in this new, technology layer with the unified ledger, we don't really see any more risks tied to the safekeeping of security tokens.
Yeah, it's something that I've observed for a long time, actually, that because we're dealing with programmable representations of securities, compliance by default should be a given. It's trivial to encode that in the smart contract which governs the behavior of the instrument.
Yeah.
So you're doing that with a whitelisting approach?
Yes, exactly.
Okay.
I know there are some companies out there and also jurisdictions that have actually, that actually allow for permissionless transfer of the security tokens. We're quite critical when it comes to that. So not saying that we are not open to explore that looking into the future, but for the time being and with the understanding that we have, there are kind of, when you think about it, money in at some stage, right? Say a participant onboarding, purchasing a security token, transferring it freely to somebody, we wouldn't know of, right? Where we're also record keeper. I mean, we're also functioning as a transfer agent or registrar, as we call it. Yeah, if we are not aware of that, okay, then the UBO changes. But at some stage, they will come back to sell the token, and so the question becomes, at latest at that stage, they will have to onboard again. They will have to identify themselves again. And
so we're in the process of the primary subscription phase. At some point then soon, given a certain critical mass or threshold issuance, I'm guessing that you will open up the secondary market for liquidity purposes. Will that be principals only, or do you imagine that market makers will participate as well?
No, we need market makers to participate. We have a central limit order book, right? And we're kickstarting liquidity on the one hand side with the issuers providing liquidity. And we are also seeing that the likes of the, say, world's leading market makers from TradFi are now wrapping their head around what the new mechanics are of providing on-chain market making and liquidity provision services.
So the starting product is a tokenized money market fund. Where do you think the natural next steps are in the evolution of interesting asset classes for tokenization and then secondary market liquidity on blockchains?
Yeah, so, and I think I didn't cover that question earlier. Why are we starting with money market funds? And the answer is because demand for money market funds from various, from various directions is currently a big topic, right? If you think in the context of collateralization, it's just one example. And then again, looking at what we see developing now further is we have ETF providers that are tokenizing their ETF portfolios. We also have mutual funds that we're tokenizing. We have corporate bonds, structured products. So we see a great increase in demand for tokenized equities. When I say tokenized equities, by the way, it's two types of. So I should not to confuse you, but the one is tokenized actually ETNs tracking equities, and the other one is actually natively tokenized equity. So working with the world's leading investment banks on the subject of tokenized IPOs, for example. And maybe that's also something that's particularly exciting and interesting for the audience, right, is the question of where is liquidity coming from? And in that context, we're talking about money market funds, for example, and fixed income products, tokenized treasuries, right? I always like to give the example of us. It's not public yet, but we're partnering with the world's leading ERP system provider. And there's a major use and business case that results out of it by us going into the App Store, where there's around about 500,000 corporate clients that get access directly in the next step to 21x. So it goes back to the point that I was making earlier. Our market infrastructure is directly accessible. So corporate clients can actually get direct access to 21x by onboarding with us. Then think of corporate clients moving to stable coins that are non-interest bearing for reasons being, issuing payments on chain, peer-to-peer. And then your treasury is sitting on non-interest bearing stable coins, right? We call that dormant cash because it needs to be put to work. And then think of the challenges that come alongside off-ramping the stable coins. There is actually fees that are incurred that are significant, and there is also a duration and a time delay that is incurred until the money is actually put to work. And so the reality is, on a market infrastructure like 21x, you can automate that. You can have AI agents working out of your ERP system to make that happen instantly as money comes in, whether it's in fiat or tokenized form. It can be instantly, almost real time. It's a matter of 2 seconds, and it will be put to work. And so what we foresee is a massive change in how corporations, for example, are going to go about managing their treasuries.
So on the one hand, you are market infrastructure. On the other hand, you plan to have an app available in the App Store of the world's largest ERP issuer. It doesn't take a genius to guess which one that might be. I'm guessing in Germany, probably. And that means
Did I say the world's largest or one of the world's? I think I said the world's largest.
And that's with something that is more akin to kind of a cash management product for corporate treasuries, let's say. Does that involve, or does that necessitate having a second license under MiCA, which is a separate licensing regime in the European Union specifically related to crypto and stablecoins? But if you're offering kind of a stablecoin driven product, does that mean that you need a second license, or is it all covered under your existing infrastructure license?
So maybe for the audience, again, because this is European regulation, right? I'm not sure how many of you are familiar with it. We have two major regulatory frameworks in the EU. The one is MiCA. That's short for Market in Crypto Assets Regulation. Right, under MiCA we see crypto assets being regulated, we see stablecoins being regulated, but specifically not the types of instruments that you would classify as financial instruments, right? Those are regulated under MiFID II, right? Financial instruments, and then we have the EU DLT regime that we were just talking about, and that actually covers for only the trading of stablecoins and tokenized financial instruments. So, yeah, we only hold a DLT TSS license under the EU DLT regime. That allows us to provide the financial market infrastructure. We need tokenized cash and tokenized asset leg. And then what we are going to do as a financial institution that we now are, we don't have to apply for a MiCA license, but we do a notification. That's going to take us a few weeks until we're allowed to also add crypto assets, cryptocurrencies, to the market venue as well. And why would we do that? Because that example that I was giving you earlier in the context of corporate treasury management, with stable coins, you could actually, substitute USDC, EuroC for BTC and ETH, right, or ETH. And so those rails, in order for frictionless and access of liquidity to the market infrastructure, that makes perfectly sense.
So we have a really exciting time, or we're at a really exciting time here in the United States where we're about to catch up. I hate to say that. The accent is Irish, but I lived and worked in the United States for 23 years. We're about to catch up here in America with the European regulatory regime, with the passage of the Genius Act, which will regulate stablecoins, from committee of the US Senate. And also, I don't know if you've had the chance to read the frequently asked questions one-pager that was produced by the Securities and Exchange Commission just last week, which basically says, here are the rules of the game for issuing digital securities in the United States, that covers things like ATS, alternative trading system, licenses, and transfer agents. We have permission to do business here in the US in the same way that 21X and similar have had permission in the European Union to do business. Any plans for the United States yet, or are you focused on Europe?
We are entering the US market. That's one of the reasons why I'm here. And I'm so excited. We haven't talked about this yet. And please, if there are any journalists, don't publish it. We see a clear track to entering the US market, to obtaining licenses and rolling out our market infrastructure. By the way, not only in the US, we're taking a very aggressive stance on expanding ourselves now from a regulatory standpoint into various jurisdictions. So taking a very close look now also at Bermuda. We're in very advanced conversations for UAE. And I think one of the next dots that we will want to connect is the Asian market, with what I said earlier, the clear target being to provide globally on-chain capital market infrastructure in order to advance in capital markets.
So many of us in this room have been on the digital assets journey now for several years, maybe as long as 10 or 12. And it feels like we're finally at this tipping point where things are going to happen. We know the tech works. All of the proofs of concept and prototypes have been built. The legal and regulatory regimes are now in place, more or less, or beginning to become clearer. What's the message that you would have for participants in the audience who might be interested in taking a step into this space?
I think you already said it, John, and that is, it's there. I mean, we're ready to do this. right? And I want to invite the audience to come and speak to me, and also Severin, our head of business development, who's here, right? Come and have a conversation with us about building the next generation of tokenized securities, no longer just digital twins, but actually delivering on the promises and claims that tokenization has been making for the last decade.
And with that, we're right on time, folks. I would like to thank Max Heinzle from 21X. Thank you.
Thank you, John.